Welcome to the Deep Dive, where we unpack the earnings calls and investor updates that matter. Today we're talk tickers, and we're digging into SuRo Capital, that's SSSS, and their Q2 2025 earnings call. And this one, well, it's a bit of a head-scratcher, isn't it? A real paradox.
It really is. You have the company calling it their strongest performance since inception. Record NAV growth, big gains realized, especially from their AI plays.
Exactly. Huge numbers. But then, boom, the market just shrugs. The stock actually went down the next day, on heavy volume too.
And that's what we need to unpack, right? This clash between, let's say, the private market enthusiasm reflected in their NAV and the public market's, well, skepticism. They had fantastic results, monetized assets, but doubts about future cash, future realizations clearly weighed on the stock.
Okay, so let's dive into that tension. First, the numbers. SuRo's a bit different. They focus on net asset value, NAV, not your typical EPS or revenue.
In NAV.
Wow. It jumped to $9.18 per share by the end of June.
Which is, what, a 38% increase just in Q2? Coming up from $6.66. That's enormous.
Huge. And importantly, it wasn't all just paper gains, right? They actually banked some cash.
That's key. Net realized gains were $21.2 million. That's about 89 cents per share. Real money.
Plus, another, nearly $45 million in unrealized appreciation on top of that.
And with that realized cash, the board moved fast. Declared a $1.25 per share dividend paid out in July.
And they didn't stop there. Management was pretty clear, signaling potentially more distributions coming.
Yeah, they mentioned possibly 2 more distributions in the second half of 2025. That sounds incredibly bullish.
So why the cold shoulder from investors? Down 3.2% the next day.
It's fascinating. That high volume tells a story. Some people were definitely buying into the NAV jump, but clearly enough investors saw it as a chance to get out, suggesting they just don't fully trust those private marks yet, or maybe the pace of getting the cash out.
It really does feel like those private valuations are still treated with suspicion until the cash is actually in the bank. So what specifically drove that NAV surge? The AI stuff?
Absolutely. Primarily CoreWeave. That thesis really paid off for them this quarter. The strong performance after CoreWeave's IPO was the main engine. And SuRo shifted gears, from just holding patiently to actively harvesting, as they put it.
Right. Active harvesting. They sold 222,240 CoreWeave shares.
Yep. Brought in $25.3 million in cash proceeds.
Generating a $15.3 million realized gain. That's a quick, significant return on about 40% of their direct investment. Pretty good timing.
Very good timing. But here's something really crucial for you, the listener, to grasp. What they sold versus what they still hold.
Okay.
Most of their remaining CoreWeave stake, valued at around $40.9 million, isn't held directly. It's in an STV, the CW Opportunity 2 LP. And they specifically called out that this position carries a material discount.
Okay. Why is that distinction so critical? Why the discount?
Because that value isn't liquid yet. There are lockup periods. The shares aren't registered for public sale. Basically, they can't just dump them on the market tomorrow. That illiquidity means more risk, hence the discount. And the public market knows this. It's a big reason for that skeptical stock reaction, even with the cash they did realize.
Got it. So cash realized is great, but the market's heavily discounting the remaining paper gains due to lockups. What else boosted the AI theme? OpenAI was mentioned too, right?
Exactly. OpenAI added fuel to the fire. There were those news reports about a massive funding round.
Like $300 billion valuation one?
That's the one, a landmark deal. And management even pointed to other reports, maybe more speculative, talking about a potential secondary sale valuing OpenAI at an incredible $500 billion.
$500 billion.
Yeah.
Wow. Even if it's just talk, that kind of number instantly marks up their holdings significantly on paper.
Precisely. Huge NAV uplift potential, even if it's unrealized for now.
And they weren't just realizing AI gains. They continued that active harvesting, selling off their entire public stake in Service Titan 2.
Right. Another nice chunk of cash there, $15.9 million in proceeds. So the liquidity engine is running. They are definitely making good on that strategic shift.
Okay. And connecting this back to the bigger picture, management linked this AI success to macro trends.
They did. They specifically talked about the absolutely massive CapEx plans coming from the hyperscalers, Microsoft, Meta.
Yeah, Microsoft forecasting record spending.
And if you add up Microsoft, Meta, Amazon, Alphabet, they're looking at nearly $400 billion in spending this year, collectively.
$400 billion.
A huge amount of that is going towards AI infrastructure, GPUs, which, directly validates the need for companies like CoreWeave. It underpins their whole investment thesis.
That's a powerful tailwind, no doubt. But it also screams concentration risk, doesn't it? if that AI bet goes sideways.
You absolutely hit the nail on the head there. The portfolio is very concentrated now. Their top 5 holdings, CoreWeave, OpenAI, who Columbia sponsored the second Alonio, make up 53% of the portfolio's fair value.
Over half the portfolio in just 5 names.
Yeah. High reward potential, absolutely, but definitely high risk if one of those big bets falters. And AI as a theme, that's about 1/3 of the entire portfolio value.
Okay, so given that intense focus, I was a bit surprised by their new investments in the quarter. Seemed almost like small side bets.
You mean the barbell strategy they seem to be employing?
Yeah, like the $5 million into Plaid, fintech plumbing, basically. Why such a relatively small amount when they're sitting on huge AI stakes? Seems like a rounding error.
Well, it might seem small compared to CoreWeave, but think strategically. Plaid is a top-tier private company, widely expected to IPO relatively soon. It's not just throwing money around, it's buying into a known quality asset with a clear path to liquidity. It diversifies away from pure AI, even if it's a smaller position for now. They're essentially buying future potential cash.
Okay, diversifying with a potential near-term liquidity event. Makes sense. But then even smaller, there was that follow-on in Liquid Death, $0.3 million.
Yeah, subsequent to quarter end. A tiny follow-on via convertible note tied to their move into energy drinks.
Again, why bother with $300 when you're managing hundreds of millions?
I think it's about maintaining optionality and showing breadth. It keeps their foot in the door with a high-growth consumer brand. It signals they aren't just an AI infrastructure fund, and it positions them for potentially larger rounds later if Liquid Death continues to perform. It shows they're still actively deploying capital across different growth areas, even in small ways.
All right, so maintaining diversification and optionality. But ultimately, this all comes back to getting cash out, right? Distributions. Liquidity was strong, $52.4 million at quarter end. What was the firm commitment on payouts?
Very firm, actually. Management explicitly restated their intention to distribute those realized gains, and they put a time frame on it. Expect at least 1, probably 2 additional distributions in the second half of this year, 2H25.
Okay, so the pressure is on to realize more gains soon. What are the triggers for that?
Well, the obvious one is more CoreWeave shares coming unlocked as those restrictions expire. That's baked in. But they also hinted at other potential liquidity events, specifically mentioned tender offers potentially happening in other big private holdings, like Canva.
Canva, what's the latest rumor?
Reportedly exploring a secondary sale at a $37 billion valuation. If SuRo participates in that, it means more realized cash, potentially feeding another distribution.
And the elephant in the room, OpenAI. Any actual deal there, especially near that rumored $500 billion mark?
Would be massive. Even a small secondary tender at a valuation anywhere near that would generate enormous realized gains and practically force significant distributions.
So the whole story has shifted. It's not just about picking winners anymore.
Exactly. It's about monetizing those winners, taking these huge paper valuations and turning them into cash for shareholders. The market is watching that execution very, very closely now.
Okay, perfect time to transition. Let's move to our This Is Not Financial Advice segment. Your chance to pitch an outrageous but plausible trade idea based on everything we've discussed.
All right. So we've laid out this core conflict. Record NAV, clear intent to distribute cash, yet the stock price fell. That disconnect, that asymmetry, is where the opportunity might lie. The market seems overly focused on the timing risk, the when will they get the cash question, while the underlying assets, especially in AI, are arguably appreciating rapidly.
So what's the pitch?
The pitch is essentially a bet against that market skepticism, a bet on a realization shock.
Yeah.
Go long SSS, maybe via longer dated call options for leverage, or even just buying the common stock aggressively. The thesis is simple. Management will likely be forced by their own success to distribute more cash sooner or larger than the market currently expects in Q3 or Q4.
Forced how?
If, and it's an if, but if they get liquidity from even a small part of that OpenAI stake at a huge valuation, maybe near that rumored $500 billion, or if the Canva secondary happens, the realized gain would be so large the subsequent distribution would likely blow past current muted expectations. It's a bet that the cash will materialize sooner rather than later from CoreWeave, OpenAI, or Canva, acting as a catalyst to close that gap between the lagging stock price and the soaring NAV. You're betting the market's current focus on illiquidity is overdone.
Okay, an interesting idea, playing that gap between NAV and market price, betting on forced distributions. And of course, our standard, very important disclaimer. This is purely a hypothetical trade idea derived from analyzing the public information from the earnings call. It is absolutely not financial advice. Always do your own research and consult with a qualified financial professional before making any investment decisions.
Absolutely. Just a thought exercise for you, our listener.
All right, let's wrap up this deep dive. Q2 for SuRo Capital, SSSS, was definitely a landmark quarter. It powerfully validated their concentrated AI thesis, with CoreWeave's IPO success and that huge OpenAI markup driving record NAV growth.
But as we've hammered home, the market's reaction showed it remains unconvinced. It's valuing the company based on the certainty of realized cash, not just the paper value. SuRo has clearly pivoted to this active harvesting strategy, but now the market is demanding proof. How fast can they actually turn these massive private valuations into shareholder distributions? That's the test.
So here's a final thought to leave you with. Consider this. SuRo's total return over the past year has crushed the S&P 500. We're talking something like 120% to 145% versus maybe 17% for the index. Huge outperformance.
So the question becomes, how much does the current stock price reflect that successful strategy shift versus how much reflects that persistent, deep-seated market skepticism about private market marks?
Can a company like this truly transform in the market's eyes? From just a holder of illiquid venture assets into something more like a dynamic generator of cash returns? Or will it always trade at a discount until the cash is literally sitting in the dividend account?
Something to ponder as you watch how these private market winners navigate their path to liquidity.
Thanks for tuning in to the deep dive. Hopefully this breakdown gives you some valuable context. Until next time.